Welcome to Terry's Tips, guys. Get a notebook, get a pen. Y'all saw the name of the title, how to get up to $500,000, y'all, with only a 600 credit score. Guys, in this video, I'm going to outline a fintech company that I have not talked about before on this channel. I'm going to give you the underwriting criteria. This is critical to you guys getting approved for this financing. And I'm also going to discuss their actual financing options. Okay, guys? And if you are new, welcome. Guys, my name is Terry. I'm a self-employed entrepreneur, a mother, YouTuber, personal and business credit guru. Guys, they upload brand new videos every Tuesday and Thursday, okay? And my channel is specifically about leveraging your personal and business credit to get wealth, to build wealth, the 6 and 7 figures. So make sure you subscribe and share. And real quick, guys, today is January 6th, and I outlined, I think it was on Tuesday, if you want me to do a live workshop on YouTube on business credit building, comment below live workshop. Comment below live workshop, and then I have January 9th, which is Sunday at 7 o'clock, that I can go live, and I will do a free business credit building workshop for you all. Got it? And I'll do my nugget at the end. So guys, let's jump right in. Write down ARF Financial. Okay, this is a fintech company. They are a direct lender. They've been around for over 20 years. They are not new. Guys, COVID-19 had a lot of lenders take away some financing options. So they did not have a whole lot of the options before, which is why I did not personally share them on my channel. However, now the economy is getting a little bit better. They have expanded what they offer. And so now I am talking about them. Okay. So they are a direct lender. This is for business credit, guys. And if you have one entity, one EIN, one business, you can get up to $500,000, guys. If you have two businesses, two entities, you can get up to $750,000. Okay, guys, I'm going to drop nuggets through the entire video. So one thing I want you guys to know is Equifax. Write that down. They are going to check your Equifax. They do look at all three, but they're specifically looking at your Equifax credit report for personal to see where you actually lie. Now, obviously, the majority of their lenders, the majority of the people that they actually lend to will have between a 650 and a 700. However, they can go down to a 600 credit score, guys. That's absolutely nothing, okay? So they can go down to a 600, but obviously your goal, especially if you're on this channel, is to have your score as high as possible. That way you can qualify for more money. Okay, guys? Now, write this down also. There's kind of 4 main things that they're looking at, and one is about to blow your mind, okay? So they're looking at your time in business. Don't let that discourage you, because depending on the type of business you have, and I will explain, you can only be incorporated for 1 month. Got it, y'all? Look, got it good 1 month, depending on the type of industry that you're in. So I'll explain. So they're looking at the time of business, time you've been in business. They're looking at your revenue. They're looking at the type of business. And guess what else they're looking at, guys? If you are a homeowner. Yes. So listen, I'm telling you guys, that's why real quick, my channel is about personal and business credit. They have found that over time, the people that they lend to, if they are homeowners, they've turned out to be better borrowers, kind of had better options, don't default as much. So guys, if you as the business owner are also a homeowner, that's going to help you get approved. Now, if you're not a homeowner, don't be discouraged. That's not going to automatically disqualify you, but I'm just letting you know that guys, they're looking at more things, especially when there's unsecured debt like this. So if you're a homeowner, that is going to help you get approved. Nugget. Okay, guys. Now for their financing options, they are a direct lender, but they call themselves like a credit enhancer. So what does that mean? That means that they have, they partner with traditional banks, right? They are a direct lender, and they enhance the financing options, meaning that you, the business owner, never have to put up collateral. Yes, y'all, write that down. So these are going to be unsecured business loans, unsecured line of credit. Huge, guys. You know what you could do with $100,000, $300,000, $500,000 unsecured business loan or business line of credit? A whole lot. So the terms, before it used to be 1 year. So guys, think about it. You're borrowing $100,000. You only got 1 year to pay it back. You're going to have some hefty payback terms. So use it for something good. Now they have between 1 and 3 years. 1 and 3 years are going to be the payback term. So obviously, the more years of payback terms, the lower your monthly payment will be, okay? So unsecured business loans, unsecured lines of debt, lines of credit, they could be between 1 and 3 years payback terms, depending on what you actually qualify for. Their application process, write this down. If you just apply, you upload your bank statements, everything looks good. Guys, that process is only taking like 3 to 5 days. It doesn't take a whole long amount of time. They use Plaid. I've talked about them a lot. Write that down. So Plaid is like a third party that will give them like view-only access to your bank statements and your business bank statements, and they will look at that to qualify you for the actual financing. Sometimes if you have your business checking account with a bank that does not kind of partner with Plaid, then you'll probably have to upload your bank statements. That could take a little bit longer. So best case scenario, everything is easy breezy, cover girl, everything is in order. 3 to 5 days. If you have to upload documents, go back and forth, do a whole bunch of things, maybe about a week to 2 weeks. Still not a super long time, guys. So also understand this. They have two types of banks, two types of businesses they're looking to lend to. They have a preferred network and an expanded network. Write this down. Preferred and expanded. So guys, this is where if you have a preferred business, this means like you have like a brick and mortar business, you have a daycare, you have a hair salon, you have a barber shop, you have a restaurant, you have, an auto dealership, something of that nature. If you are a business owner, my channel is for everybody. All types of businesses at all different levels, guys. This company, ARF Financial, they specialize in giving funding options to small and mid-sized businesses, guys. And small businesses are sometimes 500 employees and under. So that really is kind of big. So if you have a brick and mortar type location, mind you, you can be a consultant or a coach, because some have brick and mortar locations like I do, right? Because I used to see clients in person before everything went virtual for COVID. So if you have a brick and mortar commercial location, you are going to be a preferred business for them to lend to. Now they're expanded, which they now have. They didn't have this for a while. Is going to be businesses that probably don't have a brick and mortar, but you are still fundable. That's the nugget, because what I teach on my channel, being credible and fundable on paper. So you can still qualify, but you may get a wholesale option or you may get different terms until they build that relationship with you. Okay, guys, like manufacturing or maybe coaching. Now, they're not lending, I don't believe, to trucking right now. That doesn't mean all transportation, though. So this is where, when you're having a discovery call with them, ask about the industries. And a lot of you guys have more than one business. Come on, somebody. I'm a real estate investor, but I'm also a credit consultant. So maybe if they're not lending for one type of industry at one time, at a specific time, then I'll use my business consulting entity. Come on, somebody, to qualify for the actual money, because you can use it for anything. Now, another huge nugget here, and I talk about this a lot. I actually like this one because they are co-signing like so many of the things that I teach to you guys, is your reason for wanting the money. Critical. And I said this on other videos. Sometimes you guys are disqualifying yourself just because of what you're putting on the application. So guys, you're not putting on the application. You're not saying to them, I want the money in case I go bankrupt. I want the money, just to sit on just in case. No, they are looking to specifically fund businesses that are trying to grow. So they're going to ask you, what do you want the funds for? And you are going to have an option or a reason like growth, expansion, opening up a new location, renovations to grow, like something of that nature, hiring new employees, marketing, specifically growth. They want to fund businesses that are thriving. Guys, think about it. If somebody's going to give you $500,000 unsecured, they want to know that they're giving it to a business that is growing, not a business that's about to shut its doors. So have a reason for the money. Guys, they're going to do a discovery call with you. Understand this, write this down. So this means you're going to apply, you're going to speak to somebody who's going to ask you some questions, because they actually do try to work with you and customize things. But behind the scenes, they're also gathering information, right? So they'll do this discovery call, be honest with them about what you want the funds for, how long you've been in business, all of those things, so that they can give you some real true options. You guys can actually qualify. Okay, what else did I want to say? Funding options. expanded. Oh, a couple more quick things. Look, I wrote myself some notes to make sure I didn't forget anything because they have a lot to offer. So if you are a bankable, fundable business, guys, and you are qualified, let's say for like SBA funding. Let's say you qualify for $20,000 in SBA funding, but that process can be long. Maybe it's like 3 months before you can even get the money. Guys, if you gotta get approved with them for funding and say they approve you for $50,000 and you have this SBA funding for $20,000 lingering, well, they'll give you the money. Like they'll upfront you like that $20,000. And then when that money comes through, you're either going to pay it off or you're going to let them pay that off. That way you don't have to wait 3 and 4 and 5 months if you have other bank financing that you've been approved for, but it hasn't actually hit your bank account yet. That's huge. Another thing, guys, they're looking for your personal and for business. They don't want you to be overextended. So if you got $10,000 a month ago and then $30,000 2 months ago and all those things, you have all this other like financing that you've got as far as lines of credit, they're not going to want to fund you because it looks like you're underwater. You're just getting all this money, you're not paying it back. They will, however, pay off a current line of credit or something else of that nature if they can give you a bigger amount. Huge. So let's say you got approved for a $30,000 business line of credit from one lender, and then you apply with this lender, right? Fintech company, direct lender, specifically for some small and mid-sized businesses that has more flexibility. And let's say that they can give you $50,000. Well, guys, what they'll do is they'll use that money to pay that off, right? And then now you can have the whole $50,000 because it's $50,000 unsecured line of credit. This $50,000, unsecured business loan is more money for you, a better option. So if you have something else out lingering, then don't think that that's a complete, disqualifier, but they're not going to let you have like 3 and 4 and 5, like of these great big lines out. You look too risky. So guys, if you are in the preferred industries, right, a brick and mortar, then sometimes you can get funding and you've only been incorporated for 1 month. I know, y'all, 1 month. They will look at the revenue for that 1 month and they'll multiply it by 12 and use that to actually qualify you. Now, sometimes if you are not in a preferred industry or all of your information isn't quite right? Then you may have to be in business for 2 years. It's going to vary. So this is why you want to have everything in order and you also do the discovery call. Now, there's something else that they look for that I preach to you guys and that most people are missing it. A website. Yes, y'all, especially if you're a business that falls underneath the expanded lenders, they want to know that you are a valid, legitimate business. So they're going to check for things like your DUNS. They're going to check for things like a website. Guys, if you don't have it done, get her done because you can get $100,000, $200,000, $300,000, $500,000 by spending a little bit of time and effort looking fundable. Guys, I have a business credit building playlist on my YouTube channel. Go to that playlist. That's all my business credit building videos. Guys, you can go through the videos and I teach fundability, credibility. I give you guys the websites you need to actually get these things done. So go ahead and get it done because that is going to help you qualify. Now, I will say this one last thing, guys, right? And then I'll recap. They do not fund home-based businesses. Look, you hear me say in a bunch of videos, don't be a sole proprietor. Don't be a DBA. Get a virtual address or a commercial address. And guys, a lot of the virtual addresses, you guys know I partner with Opus. If you go to the link in my description of my video, I have my link tree. I have the link for Opus in my link tree. And a lot of times they have a physical address, commercial address that corresponds, guys. This is critical. They don't just fund home-based businesses because it looks too high risk for them. Got it, y'all? So you want to look fundable on paper. And guys, do the work to have, be incorporated, have your EIN, have your DUNS, have your business bank account, have at least 1 to 3 months worth of business bank statements showing revenue, right? Have at least an 80 PAYDEX score, 80 Intellus score, have your website. All those things look credible and fundable on paper. Guys, it literally can equal 6 and 7 figures for you. I don't care if it takes you a month to make a list and go through it. Do the work. You have to do what other people won't do to have what other people don't have. Amen? All right, so real quick recap. This is a fintech company. They are a direct lender. You can get up to $500,000 for one business, up to $750,000 for 2 businesses. They have preferred and expanded options. They have unsecured lines of debt, unsecured loans. They can go down to a 600 credit score. They do not fund home-based businesses, guys. And you can be in business as little as 1 month, up to 2 years, depending on the type of business, and have a reason. One more nugget right here, guys. Bankruptcy and tax liens. They look for this. If you have tax liens, it's not necessarily a number one, like a disqualifier, but they may pay it off with your line of credit or your business loan. And you can have a bankruptcy, but it needs to be like discharged within like 3 to 5 years, discharged or dismissed. That's huge because some lenders won't lend to you at all until your bankruptcy is like 7 years older off of your credit report. So if you have a bankruptcy, don't think that that's going to disqualify you, but it needs to be about 3 to 5 years old for you to look lower risk. Got it, guys? And for my nugget, guys, you hear this saying all the time. You are the average of the 5 people you hang around the most. Don't miss it. If you are, somebody who hangs around 5 people who are physically fit, then you are more likely to drink water, to work out, to take care of your body. If you hang around 5 people who are millionaires, just by nature of the conversations, the network, the opportunities, guys, you can stumble on success. If you hang around 5 people that are happily married, then you may be somebody who values your relationship, work on your relationship, as opposed to hanging around 5 people who cheat on their wife, cheat on their girlfriend, cheat on their boyfriend all the time, right? Like, you guys have to understand that a lot of you have what it takes right now. You have what it takes right now. But just because of the people around you, the environment you're in, you are stunting your growth. You have not gotten to that next level because you have not put yourself in an environment that breeds success and excellence. Come on, somebody. You're the average of the 5 people you hang around the most. If you're in your growing season, your wealth building season, your generational wealth is your goal. You want to level up. You have to be cognizant of who you're spending your time with and what you're spending your time on. I'm going to say it one last time. One of the only things that separates the 1%ers from everybody else is who they spend their time with and what they spend their time on. It's January 2022. Do an evaluation and do better. Amen. All right, guys, I hope that was helpful. Make sure you like, share, and subscribe, and I will see you later.